Global share markets are in shakedown mode after the US president imposed his tariffs without exception. Australian steel and aluminium exports to America are now 25% more expensive, and the economic knock-on effects have been swift.
Yeah, the ASX 200 lost 2% this past week, at one point dropping to a 7-month low, and with further losses still possible, that could have a big impact on our superannuation accounts. Matt Grudnoff is a senior economist at the Australia Institute and joins me now. Good morning, Matt.
Good morning, Kath.
Now, a lot of hype around these tariffs for good reason over the last week or so, but just how big an impact are they having here economically?
Well, it's hard to say. I think in the long run, they're actually not going to have a huge impact. And that's because the US can't produce that amount of steel and aluminium to supply all of their domestic market. They're going to have to continue to import. And so Australia is going to continue to export there. It's just that US citizens will pay more to buy this same amount of steel and aluminium. So really, I think the main shock is the uncertainty. Share markets and markets hate uncertainty. We're going to see a lot of volatility, particularly in the short run, but I imagine things will settle down in the longer run.
Yeah, that's an interesting point, Matt, because we know more broadly that the tariffs have thrown global markets into panic, fears of inflation, possible recession, but with that umbrella of uncertainty over everything, US shares have sold off, I think, about 8% since Donald Trump took office. This week, they entered a correction. Local markets not far off that. But to be fair, they were pretty overpriced already, weren't they?
They were. So, you know, the fact that they've come down a little bit is not a huge shock. But really what we need to remember is the reason that tariffs have been largely ignored for decades is because the group that's hurt the most by tariffs is the country imposing them. So in this case, the US. And so most of the pain we expect to happen in the US. It's the US economy that might be facing a recession, not the rest of the world. And certainly Australian superannuation invests a lot overseas and a lot in the US. And from that point of view, it might impact a bit. But really, we're at that point where we simply don't know at the moment.
Yeah.
And there is going to be volatility, but things will settle down.
Yeah, let's talk about super, because I know a lot of Australians may not realise they've got exposure to US shares through their superannuation accounts. It's a $4 trillion industry. Are you saying what we're seeing right now is not having a major impact on super balances?
It will have, yeah, absolutely, it will have an impact, particularly with the share market down. But the point is it going to be down permanently? Are these tariffs going to be permanently? Trump is a very erratic guy. Is he going to keep these tariffs in for the long haul? If the US sees consumer prices go up, now we've got to remember that the biggest issue for voters in the US, and in particular voters who voted for Trump, is cost of living. So if we see those prices for consumers go up, is Trump going to hang in there and keep those tariffs on, or is he going to get rid of them? So, you know, because we don't know any of this, we really don't know what the long-term impacts are going to be.
Yeah, and we know that he really likes to own the narrative of an increasing share market, not a decreasing one.
Yeah, and he's not seeing that at the moment.
No, he's not. So if someone's at home watching this going, well, I better check my super balance, you know, what can I do about it? A lot of this relies on time frame. So if you're someone who's nearing retirement, it's probably more of an issue than someone who's just starting out their career where they might be setting and forgetting.
Yeah, absolutely. So, you know, if you're a long way from retirement, you probably don't need to do anything. To be clear, this is not financial advice.
No,
I'm not giving financial advice. But look, if you're about to retire, you probably should have moved into lower risk areas anyway, which means how much exposure you have to the US stock market is going to be a lot less anyway. But yeah, certainly for people who don't plan to retire soon, there's going to be ups, there's going to be downs. You don't have to worry about that for, you know, years and years and years. This kind of little ups and downs is probably not going to be a concern to you.
Yeah, and just one other thing, Matt, I think perhaps plenty of people would know this, but perhaps some don't. If you've just got, say, you know, an industry super account, you can actually go in and tweak around the edges. You can asset allocate, if you like, and change if you've got a view on where things are going. I mean, European stock markets are bucking the trend. They're going up while the US is going down. You can actually take a little bit of control on your own superannuation, can't you?
You can, if that's what you want to do, and,
Yeah.
and you think you've got your finger on the pulse of the market, then absolutely you can tweak around. You could also tweak, your risk profile.
Yeah.
Most people are in the balance, but you could lower that risk profile or raise it. So there are definitely things you can do.
Yeah, and again, none of this financial advice. We're just shooting the breeze on what you could and couldn't do. Matt Grudnoff, thanks so much for joining us.
Thanks for chatting with me.
Thanks for watching. If you'd like to keep up to date with all our latest research and work, sign up to our newsletter. Delivered every fortnight, it includes behind-the-scenes updates from Richard Dennis, an exclusive cartoon from Judy Horacek, details for our upcoming events and webinars, as well as explainers, graphs, and not to mention the latest cutting-edge research and analysis from the team here on the key issues that are facing Australia. Click the button on your screen to check it out.